Welcome back to 10lessons.net, how to trade like a professional. I'm delighted to welcome you to lesson 5, where we are going to be discussing overbought and oversold conditions. Just a quick disclaimer as usual, our content is intended to be used and must be used for informational and educational purposes only. We do not offer any advice. As the website says, we do 10 lessons, 10 video tutorials along with books, and each video is attached to the end of each book. Once you've done the 10 video tutorials, then you'll have all the information you need to make informed, better decisions. So this is Lesson 5, discover tools that confirm oversold conditions. 6 is managing a live trade. Discover the best times to trade using stops and correlation and compounding. How to compound your account exponentially. Okay, lesson 5 we're going to discuss is when is a price overbought? And when is it oversold, how to recognize overbought, oversold conditions, the importance of oversold or overbought in a trend. You might have seen this, you did see this chart before. In a downtrend, we use the regression channels, if you remember. We discussed briefly about when to get in and when to get out and so on. So in this downtrend, we can see that the price has continued down for some time. And if you sell it at the top of the downtrend, then it's a comfortable place to be. Now, if you sell it here, where it's the bottom of that trend, it's too late. The price is going to come back on you at some stage. And here, this is oversold, and so on and so forth. In the uptrend, it's the opposite. Again, using the regression trend channels, we can see where the price is in the trend. So if we bought it up at the top here, you are going to be stopped out and you're going to lose money, even though you went in the proper direction in the end. So here, down at the bottom of the channel, here at the middle of this uptrend here, even along this way here, it's fine. Buying above and at the top of the range is highly speculative, and we want to reduce risks. We're going to go in the market in the next few seconds, and we're going to have a look at a few situations live, just so we get a better idea, be better informed about getting a safe position. So this is a chart for 1190 going up above the 20-day moving average. You should know that by now. Another tool which is really useful, and you'll have this as well, is the 1473 Stochastic. This shows overbought, oversold conditions. So here, for instance, there's been a couple of opportunities during this downtrend on the Eurodollar. So here, for instance, at this peak, you could have said, well, hold on a sec, this is overbought. You certainly don't want to buy this. And then you could have sold it and made some money. Again, here, this is not a safe entry for a buy. If the trend is down, it's definitely a safe entry for a sell. Now, what we're seeing currently is that the price has been oversold. And there is divergence here. Positive divergence. You should have covered this course in whatever number it was, number 4, I think. And it's an opportunity to get into a position very early before the big move. Let's just have a look around. The pound Swiss has been in an uptrend. We're no longer in this divergence in this market. But as we see, we did make some money here. The regression channel came down to this bottom end of this regression channel, was over sold in an uptrend. Now this is very, very powerful. When you get a position where the price is oversold on our stochastic, then in an uptrend, there's a very high probability that it's going to come back up. And you could have bought immediately on that 50-day moving average, or you could have waited, which would have been the sensible thing, for the price to move above the 20-day moving average. Now, when prices are in a strong trend, the stochastic, as shown here, can be overbought in an uptrend for quite some time. What we reckon that you should do, and what we do, is we trail the red line. Again, this is covered in the stop losses in lesson 7. Let me have a look at oil. We do a lot of trading in oil. So we are long oil, and you can probably see why. Oil is in an uptrend, probably going to about $72 in the next week or two. And as you can see here, our stochastic is oversold in a strong uptrend. These are perfect trades, perfect setups. So there was a buy here, which we had as it went above the moving averages. And of course, the stochastic confirmed that it's overbought, likely to come down. We actually banked about 530 pips in this move. So we banked our money, closed position, and then wait for the next setup, which is now perfect. So hopefully that gives you a better understanding of overbought, oversold conditions, where you can exit, where you can enter, and where you can actually make more money. That's it for lesson 5. Look forward to seeing you in lesson 6.